Hello and welcome to Kincora Copper Investor Briefing webinar. I'm Lel from the Capital Network and I'll be the moderator for this event. Today's presentation has been lodged on the ASX this morning and will run for about 30 to 40 minutes before question time. A bit of housekeeping for everyone. Attendees will be on mute but have the opportunity to type in questions by following the prompts on their screen. Timing permitting, these questions will be answered at the end of the formal presentation. But I will now pass you to President and CEO Sam Spring, who will take you through both the Kincora Copper achievements over the past quarter, recent announcements over this week, and growth plans. Over to you, Sam.
Thanks, Lel, for the opportunity there, and a great junction to give investors in the market an update in light of the sixth asset level deal that we announced earlier this week with AngloGold Ashanti. Hopefully the presentations come up on the screen. I'll walk through this. As Lel mentioned, this is up on the ASX platform and will be up on the TSXV platform later today. And I guess I won't, as such, spend much time going through the usual cautionary statements. But what I will want to try and emphasise is that Kincora is an active explorer and in the last period of 12 months shifted its funding model to a project generation model. And that's something that's not too common on the ASX. It's more of a North American model. But what it means is we've got a hybrid of value catalysts, particularly where we are in execution of this strategy. And what we're looking to do is create shareholder value through doing deals, drilling, and ultimately discovery. And what are we looking for? We're looking for large, globally significant copper gold systems, tier one scales, the ones that any major would want in their portfolio. We've got a portfolio of 14 projects that sit within the portfolio, and we'll touch on those briefly today. We've got an industry-leading team that's obviously critical at this stage of looking to make discoveries. They've made multiple discoveries in the past, including within this belt. We'll touch on the team in a little bit more detail as well. Again, this project generation model, we've just done our sixth deal that unlocks up to over $110 million worth of potential partner funding. Again, we'll touch on that business model a little bit more as we go through this presentation. But one of the key things in terms of news flow that we really want to emphasise in this webinar is that drilling's ramping up. The management fees that we get from managing those programs where we're operating is ramping up, and we've got further deals to come. And we're absolutely confident that what we're doing is scalable, and you'll see news flow both with the drill bit from ongoing programs, but further deals that we're working on at the moment, and we're very confident will come to fruition in near term. So a corporate snapshot, sub-million, 10 million market cap. So that provides a lot of leverage to delivery of our strategy. What we've done today is have a transition period as we've pivoted to this funding model. For 12, 18 months, we weren't drilling. And as an explorer, that's what you live and breathe by traditionally, is that drilling update. That's the reason to own the stock, have a catalyst. What we've now got is a transition where fourth quarter last year, we had 7,000 metres of partner-funded drilling. We had over $3.5 million worth of money going into the ground that Kincora shareholders weren't having to fund at the listed company level. So we've come through that transition period. We've got news flow ramping up, and we're in the middle of this journey of getting further asset level partners in. Prior to this deal that we announced this week, we had 5 deals with over $60 million worth of potential partner funding. Now we're on to our sixth deal that's unlocked potentially over $110 million worth of partner funding. Where we want to ultimately get to is $10 million a year of exploration that we're managing, that we're getting a management fee on, resulting in us being in a self-funding business model and have a diversified range of partners, not just one major partner, but a list of different partners. And then ultimately you've got leverage to discovery from multiple programs being drilled and multiple targets, but you've also got a favourable risk mitigation scenario of multiple I guess, partners and funding sources, so that if one project slows down, another one picks up that slack. What this business model has also enabled us to do is pursue counter-cyclical growth. Last year, we were able to pick up 4 new projects within some sort of New South Wales, within the core portfolio that we're exploring at the moment. And off the back of this deal that we've announced this week, we've now monetised 3 of those projects with field work ramping up. So if we weren't changing the business model, given the cost of capital for exploration in the current market, you probably would have seen us have to shrink focus on those core assets. Rather, with this change in funding model, with management fees and partner funding ramping up, we've been able to pursue that counter-cyclical growth, which gives us more scale potential. I should mention that we do have a sole-funded project that we're keen to do 100% of, our Condobolin project. Why aren't we looking for a partner for Condobolin at this stage? Well, it's a Cobar-style project. You've seen a number of pretty significant recent exploration successes. Australian Gold and Copper, AGC, on the ASX with its Achilles discovery. You've had a number of good new discoveries in this Cobar district with Aurelia, with Metals Acquisition. And the nice thing about our Condo project or Condobolin project is that it's high grade, near surface, a historical mining field within trucking distance to a mill that's looking for third-party ore. How you commercialise that and add value as a junior is very different in terms of timelines and capitals to the rest of the major copper porphyry projects that we've got in the portfolio. And maybe just putting that on the map, our Condobolin project sits down here in the southern Cobar. It's a different project, again, to the porphyries that sit in the Macquarie Arc, that sit out to the east here. The Junee Narromine Belt being the western major volcanic belt in the major arc in the belt, and the Molong Belt being out to the east. The portfolio of projects that we've done today, as mentioned, are for our earlier stage non-core projects. Our flagship, more advanced, more mature, de-risk projects sit down more to the southern part of the belt. Include our Trundle project that's within what we refer to as the North Parks block, and down in the Cow block you've got our Fairholme and Geelong projects. Within the North Parks block, you've obviously got North Parks, which is Australia's second largest porphyry mine. Down in the Cow block, you've got Evolution Mining's flagship Cal project, 14 million ounce gold endowment. You've got Marsden, which is a very big copper gold system as well, and a really world-class terrain and setting. In the Southern Gobi, we still retain a very attractive interest to our Bronze Fox project. When you look at emerging porphyry belts anywhere in the world, the Southern Gobi is one of the fastest growing regions. You've got Oyu Tolgoi, Rio Tinto's flagship copper growth project that's on track to be the 4th biggest copper mine in the world. You've got Xanadu Mines' Karmatsai project that's at an interesting stage with FID pending, and a corporate transaction potentially with its Chinese partner Zijing Mining, and Sabin Savaga, which is a $1 billion construction project at the moment. Bronze Fox really is the 4th porphyry district in that emerging belt, and Kincora retains an attractive interest with Dorminco and ASX Explorer handling that project and funding that project on a day-to-day basis. So that's an overview of the major project portfolios. And this is how we're looking at them from a partner project perspective. For our non-core projects, we've done the deal with Dorminco for the Southern Gobi. For the Condobolin project, we've done a really innovative transaction, a success-based exploration alliance with Earth AI, who's a private AI group. They are well-funded, having just raised $20 million in January. As the name suggests, they're an artificial intelligence machine learning group that only upon making a new discovery earns an interest in this project, and that interest is an NSR. Kincora retains 100% of that project. So it's a really interesting, innovative business model. Earth AI has done the most extensive drilling program to date at the Condobolin project. They've completed 5 holes and have recently undertaken an airborne geophysical survey. So there should be pending news flow coming there from Earth AI, where they operate, fund and manage that project, and only end up with something if they make a new discovery. In terms of new district opportunities in the Macquarie Arc, you've got 160 million ounce gold endowment equivalent into the south. The covered extensions of the belt potentially are the largest parts in the Macquarie Arc, and that's what we're looking for in these earlier stage projects where we've already found partners. In the northern Junee Narromine Belt, we've just this week announced the second earn-in deal with AngloGold Ashanti. That covers 100k strike, it covers 5 continuous projects and supports up to $100 million worth of funding being incurred by AngloGold Ashanti. Drilling's ongoing. We've just commenced hole 13 under the joint venture. We've completed a ground gravity survey earlier this year. We should have some further targets that we'll be able to announce to market that has come out of that program. So that's active news flow. Again, where we're managing, we get a 10% management fee on expenditure that's incurred. Within the Northern Molong Belt, we've got our Wongarvan project. This is a high priority target that John Holiday, our technical director, had identified for Newcrest back in the 1990s. He was looking to drill that in 1996, and then they got him onto Cadia Ridgeway and Cadia Far East. The Wongarvan project's never been drilled, despite having new district scale potential and sitting within what we think is a transverse structure that's related to the Boda Kaiser systems and deposits and discoveries that Alkane Resources have made, and ultimately is about a 15 million ounce gold equivalent ore body and discoveries within Boda Kaiser. That's a project I'll touch on in a little bit more detail in a moment, but again, we picked that project up early last year. We've done a deal and monetized that within 12 months, and fieldwork's looking to commence shortly. In terms of the deal flow that we've got coming up, these are our more, I guess, established, de-risked, large-scale existing mineral system projects. They're close to world-class deposits and mines. These are what we more categorise as our flagship core projects. And we've taken a little bit more time to try and find the right asset level partners to help, I guess, effectively join us, take that project funding, and give these assets the number of meters and the amount of dollars needed to really systematically advance them and push them up the curve. I'll put these onto a map in the following slide to help sort of provide a little bit more perspective. The Trundle project, we've invested over $10 million worth of shareholder funds that we've raised at the listed company level. There's two series of known large-scale mineral systems up to the north, the Mordialloc Northeast projects, down to the south, Trundle Park, the southern extension zones, the Northeast Gold Zone, Duns. We've made a number of new discoveries at Trundle. We've discovered the largest mineralised skarn system in New South Wales, which helps illustrate the scale of the mineralised system. We think Trundle is a rifted off part of the North Parkes intrusive complex. North Parkes has an over 20 million ounce gold equivalent resource. It's been in production for over 20 years. It's really this new acquisition that Evolution Mining secured about 12 months ago, and they're doing a great job illustrating the potential of that asset through exploration, and that mill's recently been expanded. So Trundle is a really attractive asset that we feel is unique, sitting in a brownfield setting that not many juniors in Australia or on a global basis would be lucky enough to have in their portfolio. Again, we're looking to find that partner to unlock that value and really advance that project. In a similar methodology or similar setting is the Cowal assets that we've got. Fairholme is immediately adjacent to, and we think related to the Cowal structural gold corridor. The Gateway prospect that we've drilled down to the south of the Fairholme project's a 1.6k mineralised footprint. We've expanded that from 600 metres when we first got that project. Up to the north, there's some really interesting copper, gold, porphyry targets. Again, we've drilled there, had some success. And at the moment, immediately to the north, earning into a project is Newmont. They're drilling earlier stage targets looking for copper gold systems. Down to the south, within that same complex, we've got the Gemelong project, again a known mineralised system, copper gold porphyry system within that block, which is really owned by and consolidated now fully with Newmont, FMG and Evolution Mining having projects there. So those assets that we're looking to find partners for sit in fantastic locations, have big known mineral systems. The earlier stage projects that we've got up to the north, we found partnerships with AngloGold Ashanti. This area that we've just done the deal this week on covers 100k north-south strike. And what we're looking for there is a new district. We know to the south, there's 160 million ounce gold equivalent endowment. Up to the north, magnetics and the gravity maps these volcanic belts very effectively. It could be the largest part of the Macquarie Arc. And just to put that into scale, it's about twice the size of the Vicuña Belt, the new emerging discovery that you've got in the Central Andes on the Chilean border, where you've had BHP and the Lundins consolidate that district. And there's 4 recent discoveries, pre-development, post-discovery, that are being valued by the market at over $10 billion. The deal structure that we've got with AngloGold Ashanti would, if you had exploration success, get you to that equivalent stage. And for Kincora shareholders, you're carried to that equivalent stage with the deals that we've got in place, which gives you huge leverage to exploration success. So who's the team? The team has got an exceptional exploration track record. On the right-hand side is the technical committee. The chair of the technical committee and on the board is John Holliday. John's a foremost figure in New South Wales porphyries. He was a key figure in the origination, management and discovery phases of Cadia, also the Marsden discovery on the Cow Block. John's based in the district and very hands-on driving the exploration strategy. Our VP of Exploration, Peter Lehman, has been involved with a number of international discoveries, the largest, another tier 1 asset being Reko Diq. That technical team is extremely strong, extremely aligned with shareholders, being shareholders ourselves within the board and the management team. You've got over 40% of the company in those hands. So that's a very strong alignment to existing shareholders, but that's also important when we're talking to these mid-tiers and majors about asset level partnerships. You need to be a credible partner and you need to be aligned with those partners. And we have that at the technical committee level, but we also have that at the board level. Our chairman, Cameron McRae, the seasoned executive, seasoned chairman, 28 years with Rio Tinto, led the full development cycle with in 4 countries, 3 continents, knows this space very well, based in New South Wales himself. Jeremy Robinson is a significant shareholder himself, but also represents our largest shareholder, RareX. Luke Murray, Chief Operating Officer for the Bloomfield Group, who's our 2nd largest shareholder, and an excellent partner with mining interests in New South Wales. So a very strong technical team that is aligned with shareholders and new asset level partners. And sort of moving on to this project generator asset level funding model, why would you be interested as a retail investor buying an exploration junior that's got a partner? And there's a couple of key aspects for that in my mind. From a technical perspective, and particularly for those that aren't geologists or sophisticated enough to understand the concepts and the targets, they provide endorsement. They provide credibility to the technical team. They provide credibility of what the target is. And in the nature of what we're looking for in this part of the world, you're looking for new belts, you're looking for a new district, or you're looking for large tier 1 scale project level discovery, something that would host 10 million ounce gold equivalent. That's what the majors in the copper gold diversified major space are looking for. So to have that partner really helps provide technical endorsement and means that as a retail or family office or specialist investor, you've got a concept that someone's really looked under the bonnet of that project, looked under the bonnet of the team, and they're coming in and they've done that due diligence for you. They also bring best-in-class exploration and exploration techniques and tech. As we've sort of touched on, we've got Fleet Space as a partner for our Wongarden project. They're bringing industry-leading technology to the table. We've got Earth AI that's bringing industry-leading exploration to the table. Through the work we're already doing with AngloGold Ashanti up at Nyngan, we're benefiting from the work that they've done already in this belt, not in a global framework, and they're bringing new ideas that we potentially wouldn't have had ourselves. So it's a true partnership and technical endorsement. And then from an ESG perspective, it should provide investors and stakeholders generally in the community that we're going about things in a way that are best in class, that the big industry majors would look to do. From a commercial perspective, we'd like to think that this is a really attractive, lower cost of capital in this current market. It's a de-risk funding source. It's one that's more aligned to existing shareholders. And it means that as a listed company level investor, $1 that you put into Kincora goes a hell of a lot further because you're effectively not being diluted at the listed company level. You're being diluted with these partners at the asset level perspective. And in addition to that, what we're looking to ramp up is the management fee approach. In the fourth quarter last year, we managed work programs for about $1.5 million in the Northern Junee Narromine Belt at our Nyngan project in the partnership with AngloGold Ashanti. For that, we receive a 10% management fee. And that means that if we get to that target where you've got 10 million of partner-funded drilling that's going into the ground and you're getting a 10% management fee, that gives you $1 million worth of income, which is a rare situation for an exploration junior. That means that you've got your G&A covered. You're getting meaningful dollars being put in the ground, but you're not coming back with corporate costs being a further burden for shareholders to carry. And the nice thing about this project generator model is if you find what you're looking for, there's a clear exit strategy. You've got that alignment there. And in that scenario with the deals that we've done with our partners today, it's a real win-win type scenario where we as the exploration junior will do really well out of that while the major gets what they want, which is a big discovery. And I guess we'll walk through a couple of case studies for that project generator model here on this current slide. And the key thing to really emphasize is while you're not facing that same amount of listed company level dilution, you are not giving away that upside. Probably the best Australia copper gold success story of recent times is Greatland Gold. That period when Newcrest started earning in took a 50 million market cap company to over 1.5 billion market cap without Greatland Gold shareholders having to put money in their back pockets and having to raise further funds every 6, 12, 18 months. Fantastic success story. Did that asset get to a tier 1 asset over that course of the journey with Newcrest drilling? No, but there was still a huge amount of value that was created and liquidity that was driven there for shareholders to do very well out of that. In terms of current day porphyry examples, I'll defer to a couple in the Canadian marketplace, and one that's specifically relevant to us, Inflection Resources. Inflection, since they did a deal with AngloGold Ashanti in the same part of the northern part of the Junee Narromine Belt, is a 3X. They've had some pretty encouraging results without a big discovery, technical successes that otherwise without that partner would probably not be well understood or be able to be funded by the capital markets in this current environment. But here you are with over 30 million market cap and a 3X since they did the deal with AngloGold Ashanti. And that's because to date, they've had about $12.5 million worth of partner-funded drilling going in there, and they've had some reasonable results that provide encouragement for that proof of concept. And we think that's a really direct analogue for us, bearing in mind that we've now got the same partner, AngloGold Ashanti, with a scalable project portfolio, 5 projects covering 100 square kilometres with up to $100 million worth of earning, undertaking the same exploration with the same targets, but benefiting from the learnings that Inflection's got. So we think that's a really good, I guess, case study from a technical and from a commercial and from a value perspective relating to the deal that we've just announced this week. So where are we at with this project generation strategy? We're still work in progress. And I think that's the really interesting thing from a retail family office and sophisticated fund investor perspective right now is that we've got catalysts from deals that have been done today, drilling ramping up, but further larger scale deals that we've got coming through. A key question I've had from people over the last couple of weeks is why are you a sub 10 million market cap? And I think there's a few reasons for that. We had that 12, 18 month period where we weren't drilling. We were doing our homework. We were consolidating the asset level portfolio. We bought out a minority carried interest level partner. That created the way to pursue this business model. That 100% ownership was only achieved in December 2023. Through the course of 2024, we were able to do 4 deals with asset level partners. We were able to do 1 further extension. That was able to get us to about $60 million worth of partner funding at the asset level. This deal that we've just announced takes us to 6 asset level deals and 110 million of potential partner funding. So we're increasing that scale. We were able to opportunistically grow in 2024, and now we've done 3 deals for those 4 projects that we're able to pick up. So we've pursued that counter-cyclical growth. But now we're at that interesting junction of drilling ramping up, management fees ramping up, and value catalysts from those things that we're in control of but also a special situations type event of doing deals for those more mature assets that I was touching on, Gemelong, Fairholme, Trundle, being projects that are within established mineral camps where you've got over 15 million ounce gold equivalent endowments, which are the scale of the projects that at a project scale level, the gold majors, the mid-tier majors, the copper majors are all looking for, and in brownfield camps where you've got existing operations. So from a value perspective, we're at that really, I think, sweet spot of drill rigs turning, deals in place that provides proof of concept, but really trying to get to that stage of increasing that scale by doing deals for our more mature assets. So what are the catalysts, again, driven by the drill pit and driven by corporate opportunities and further deals? Within the project portfolio, we're on hole 13 at Ningen. We should have some news flow coming up of what are the results of the ground gravity survey that we've done, how large is this ongoing scout program. The intention is to come back and do a follow-up program once this scout program is done. So there's active workflow there. And again, this is a project that we receive a 10% management fee on. The Nevertire project in Nevertire South, we're now part of the AngloGold Ashanti earnings. We think the Nevertire South project is a real standout. We think it's the most advanced geologically in the covered extension of New South Wales. There's some previous Newcrest drill holes that were followed up to the south. There was over 20 holes drilled by Newcrest and then followed up by further campaigns by St Barbara, chasing the southern extension. But the most northern holes where there was the best results haven't been followed up, and that's where we're looking to do step-out drilling to either make a new discovery or vector to a new discovery within the consolidated licence portfolio that we've got now at Nevertire South. So that's another project that we receive a 10% management fee, and again, expect news flow coming from that in terms of when do we get in there and start drilling at Nevertire South. Condobolin, as mentioned, is included in that exploration alliance with Earth AI. They've completed their 5th hole earlier this year. They've undertaken a VTEM geophysical survey, interpretation ongoing, further drilling expected. So news flow from results to date and field plans for the balance of the rest of the year is expected. And again, another news flow event. Bronze Fox is an earn out that we've done with Orminco. Orminco is already out in the field doing mapping, soil sampling. They're looking to drill at 2 big intrusive complexes, including the Shooting North intrusive complex, which we're extremely excited about. The reason why you go to places like Mongolia is to find big new discoveries. And the Shooting lithocap is a huge system that sits adjacent. And for 20, 30 years, people have been going, where's the intrusive complex relating to Shooting? We think it sits on the southern part of the Bronze Fox tenements, outcropping, subcropping intrusions that have been identified and never drilled. And that provides really asymmetric exploration success if those targets are what we think they are. Bronze Fox has also got an existing mining licence, an existing JORC resource. So it's one that we're quite bullish on the deal that we've done with Orminco being carried at the asset level, and we're really encouraged by what they'll hopefully be able to achieve with the field season opening up there in the Mongolian spring. Wongarvan, again, a greenfield project that's never been drilled that offers true district scale potential that we've done an earn-out deal with Fleet Space where they can earn a minority interest for. I'd expect to see news flow coming through there and a maiden drilling program in the course of 2025. So plenty of value catalysts with drilling and at the asset level, but keep an eye out for further deals. We're absolutely confident that this deal that we've announced this week isn't the last, and you'll see near-term news flow. We've done deals for 8 of our 12 porphyry projects that have unlocked 110 million of partner funding. Now we're focusing on those more advanced projects that are proximal to existing mines and have direct analogues that show real scale potential. So significant catalysts, and trying to recap the story back and some key takeaway points. Really attractive outlook for copper and gold. We offer scalable projects and a scalable business model, providing investors exposure to that attractive commodity mix. We've got a technical team that's aligned by being shareholders that have significant track record of discovery and operating track records that will attract and continue to attract majors and this management fee model. and I guess that's a key element for why these projects we think are attractive, is that our technical team's been able to source them. We're managing those projects. There's a portfolio of them, and with exploration, it's a numbers game. The more targets that you drill, the better the chances of creating value to shareholders. And we've got a funding model that helps provide technical endorsement of the assets. It providing a lower cost of capital than what you'd be able to achieve at the listed company level in the current market. You'd be able to achieve management fees to get to this self-funding business model, and it's scalable. And I think this deal that we've announced this week helps illustrate that it's scalable. And the next deal that we're very confident will be coming through in the near term will again emphasise that it's scalable and diversifiable with other asset level partners in there. So a really unique setting there for retail investors. You've got catalysts from further deals, from existing drilling and ramping up of further drilling, and ultimately discovery. And we've got, I guess, a number of peers out there in that marketplace that we've just touched on that provides very clear roadmaps for what we think the value of the existing deals that we've done to date are, let alone what we think some of these other deals that we're working on in the background that will come to fruition in the near term might be able to achieve. So I guess with that, I'll sort of hand it back to you and any questions that might have come through.
Yes, thank you so much, Sam, President and CEO of Kincora Copper. Great to hear about your value catalysts, also that there are more deals ahead. And we have had a number of questions that have come through. Firstly, congrats on the well-executed strategy. My question is, are there any plans to drill Condo in the current or next quarter in an event there is no JV partner interest?
Yeah, and that's a good question. And we're very mindful that we want to have one project that we've got 100% own interest in, and Condobolin is one of those. The depth of the target and the nature of the system being 20 historical open pits that were mined to the water table provides some pretty low-hanging fruit, we think, from a target perspective. And I might just sort of touch on a slide briefly on Condobolin, and again, just mentioning that this slide deck's up on our website already and up on the ASX, and will be the TSX websites later. But here it is. What you can see here, again, same scale to Achilles, the Australian gold and copper discovery. We know from CSA and a number of these other Cobar style deposits, they're vertically extensive. We've got hits here of economic widths and grades, sort of 4 metres at 20 grams, 4 metres at 14, 5 at almost 8, at open pit depth, stopping near where the water table is or shortly below it. That's really low-hanging fruit, given the exploration success that you've seen within the district of drilling these targets to further depths, but also looking at, I guess, other pods or deposits within the wider district. And the nice thing is that we're within an existing area that exploration success means that there's an existing mill that we'd be able to truck that ore to. I guess, where does Condo sit within our current project portfolio? We're busy ramping up these programs with AngloGold Ashanti. We're busy looking to harvest the existing assets that we haven't got partners for, and I think that's the immediate value catalyst, and Condo will follow at the right sort of corporate time. So it's one that I wouldn't expect to see drilling in the next quarter on, but we're very keen second half of the year to be in there and drilling.
Excellent. Now, do you have any analysts covering the stock now or potential coverage in the near future? And what is your investor relations like in Canada?
Bridge Street Capital has historically provided some good research. Morgan has done a great job backing us since we dual listed on the ASX. We're speaking to various other brokers, particularly East Coast brokers that are familiar with New South Wales and watch the space closely. One thing we really are keen to do is expand the knowledge of this story into the North American marketplace. We've got the dual listing. We've got a direct peer there with Inflection, and I'll just bring back that slide on Inflection that we were sort of referring to before. Or actually, I'll bring up this slide here. If I can find it, apologies. Yeah, Inflection's got the ground here in orange to our east, that's adjacent to us in the northern Guinea Narromine Belt. They've got AngloGold Ashanti as their asset level partner. They did that initial deal with AngloGold Ashanti in third quarter 2023. We started drilling in the fourth quarter 2024. We've spent about $1.5 million. They've incurred $12.5 million up until December last year. Land holding, we've got more in partnership with AngloGold Ashanti, and this is an earlier stage project within their wider portfolio, while for Inflection, it's really their flagship asset. And you can see the value disconnect there. They're 4 times our market cap. So that's a well-known story, and the project generator model, a well-known strategy in the North American market. So we're very keen to engage into the North American market. Obviously, the pools of capital are very significant, and we've got a very clear strategy for looking to engage into that marketplace and promote the story, given the direct peer and value disconnect that we've got.
Excellent. Now, Kincora's stated ambition is to be the operator for exploration budgets of a scale across its portfolio that provides sufficient project management fees for the company to be self-funding. Do you have an aspirational timeline for delivery of this self-funding target?
Yeah, that's a great question, Lel. And I think we're probably one deal away from being able to achieve that. The deals we've done to date are giving us pretty meaningful programs, and I think we'll have some news flow in terms of what's the scale of the programs we're expecting to have with AngloGold Ashanti this calendar year. But achieving one more deal for some of those more flagship projects, Trundle, Fairholme, Gemelong, I think that'll get us to that scenario where we can see comfortably 10 million a year of exploration that we're managing. That's in addition to, say, Earth AI with Condobolin. That's in addition to Wongarvan with Fleet Space, or Minko with Mongolia. So I think we're one deal away from being able to achieve that ambition. And it was the first time we've really come out and publicly said that's our target this week, off the back of the expanded agreement with AngloGold Ashanti in the second JV.
More on that AngloGold Ashanti agreement. It's full steam ahead, as you mentioned, with preparatory work for a maiden drilling campaign. What are the potential timelines for this drilling campaign, and any update on the current drilling campaign at the Nyanjum project?
We're on hole 13 at Nyngan. We did 6 holes in the fourth quarter last year. We've done a ground gravity survey earlier this year, which has provided some encouraging results, and we're just working through what those targets are and what's the scale of that scout drilling program. So at Nyngan, there should be news flow pending from ongoing work and some encouraging results. We've already expanded that program once, and I think it's fair to assume that we'll probably see that expanded again. In terms of Nevertire South, now that you've had that licence boundary be consolidated and the whole of the Nevertire magmatic complex consolidated under 2 separate earnings with AngloGold, we're keen to get down there and do a drilling campaign. So what the concept is we'll finish this scout program at Nyngan, go down to Nevertire South, undertake what we think is a really high priority, high impact drilling campaign, test some of those really standout targets that have been sitting there since 2008 when Newcrest last drilled, test that northern extent, and then come back and do a follow-up program at Nyngan, doing step-out drilling as well. So I think there's plenty of news flow to come with that AngloGold Ashanti agreement and earn-in deals, but that's probably more details to come in following in press releases.
Great. And final question, Sam, can you outline the potential of inking similar deals on your key assets in the future?
I mean, that's a great question there, Lel, and I think maybe just I'll go to a slide that's in sort of the back of the deck here, just to help put the scale of this belt into perspective, because you've had over $16 billion worth of M&A for the producing porphyry projects. You've had now over 385 million of earn-in deals from majors with juniors looking for copper porphyries. That gives us a great deal of confidence that these more advanced projects that are in known existing mineral systems proximal to existing world-class mines will find a home, and will find a home with pretty attractive deal terms. And when you look at who those assets could appeal with, they're of a scale, those mineral camps, that would attract themselves to a diversified major, a copper major, or a gold major. And you're seeing the gold majors being quite active in this belt. You've had Gold Fields re-enter You've had obviously AngloGold Ashanti doing various deals. You've got Newmont earning into Coonabry's projects, one being immediately adjacent to our Fairholme project. They're drilling some earlier stage targets than what we've got at Fairholme on the other side of the Cow ore body. So it provides us a great deal of confidence that this business model is scalable, that we'll be able to achieve diversification in multiple partners, and that there'll be significant news flow that comes through in the course of, the near to longer term.
Thank you, Sam, President and CEO of Kincora Copper, for taking us through the company's investment opportunity today, all the value catalysts as well. And we also thank all of our attendees. That concludes today's investor briefing webinar. I'm Lel from the Capital Network, and we look forward to updating you on Kincora Copper's developments as they come through. Thank you, everyone.